Here to dive into industry trends with leading ETF experts, this is ETF Spotlight with Neena Mishra.
Hello and welcome to ETF Spotlight. I'm your host, Neena Mishra. My guest today is Patti, CEO of VistaShares. We're talking about investing in the AI supercycle and a new VistaShares ETF. Adam, welcome. Great to have you with us today.
Well, thank you very much for having me.
So you are an ETF industry veteran, but some of our listeners might not be familiar with you. So why don't you tell us a little bit about yourself and VistaShares?
Sure. Briefly on my background, I've been in the ETF business since 2001, incredibly. I used to run an indexing division of Time Warner called Fortune Indexes, and we launched an ETF way back in 01 called the Fortune 500 ETF, which was, we launched it with State Street Global Advisors. That was very, very early in the ETF market. Fast forward, I started a company in 2006 called Index IQ. Also early in the ETF business, I think we were the 18th ETF issuer in the country. And we focused on liquid alternatives ETFs, kind of hedge fund replication and packaging institutional quality investment strategies in a ETF wrapper. I sold that business to New York Life in 2015, and I spent a few years there helping them build out their global ETF platform. And then now I've been fortunate enough to get back in with an exciting new company called VistaShares. And I'm partnered with a company called DVX Ventures, which is run by a gentleman named John McNeil. John was the president of Tesla, the COO of Lyft. He's on the board of General Motors, and has very keen insights into how to properly invest in different technologies, and that's why we focused on AI as our first theme to go after.
Excellent and very interesting background. So any discussion about AI investing, I think, should include DeepSeek and its implications, because its claim of developing those advanced AI model at a very low cost that triggered a sell-off in all AI-related stocks. And some experts, in fact, now believe that DeepSeek is using more NVIDIA chips than it has disclosed, and probably also spending significantly more than it reported. And probably it leveraged US model outputs as well, using a process called distillation. So it is too early to assess the full implications. But I was interested in your thoughts about DeepSeek and what DeepSeek means for the AI trade.
Yeah, I mean, look, I think you covered a few of the key points there. When that was announced, that was certainly a shock to the system in the AI industry. There's some geopolitical grandstanding, I think, going on. And just days before Trump announced the $500 billion investment in the Stargate program, all focused on AI infrastructure. And then, of course, a few days later came from China on the DeepSeek situation. But I think what's come across pretty clearly since then, that I think the impact that DeepSeek is making is a little bit overrated or overstated. Firstly, there was a question on whether that investment that they made was really focused on the training segment of the model or the inference segment, and I think it's become clear they really were focused more on the training there. And as you mentioned, how many NVIDIA chips were they actually using illegally through Singapore? So I think there's a lot of questions there, but I think it just goes to the main point that AI is a national security focus for countries around the world. This is a massive, massive shift in the way that people, companies, and governments will be operating and using information to provide themselves an advantage. So the dollars that are being invested in the AI space generally are unprecedented and provide some really significant and exciting investment opportunities for investors.
So let's talk about AI supercycle, and before that, let's talk about super cycles in general, some basics. So on your website, I saw that you mentioned that understanding and analyzing super cycles is crucial for navigating markets and for making informed investment decisions, and that you have identified two primary super cycles. So please tell us what super cycles are and what are these primary super cycles that you have identified.
Sure. So, I mean, the premise behind our thematic investment strategy is the super cycle concept, which, from a high level is simply, long-term disruptive trends driven by technology. So these are 10 and 20 year long trends that are really going to change the way, again, people live and work around the world and create some unprecedented economic opportunities along the way. So if you look back in history, some of the other super cycles that have occurred was certainly, the advent of electricity. In 100 plus years ago. Most recently, the internet was a super cycle and still is. But what's interesting now is that we actually see there's four main super cycles that are converging at the same time, which has never happened in the history of the world that we're aware of. One, of course, is AI. The other is electrification, and then robotics and biotech. Now, there's a lot of cross-pollination between those four. However, they're all taking distinct paths on their own. So we think there's going to be some massive investment opportunities along all four of those.
Excellent. So 4 super cycles. And so you have launched one ETF and you plan to launch 3 more in the coming months?
Well, I mean, we're going to launch certainly where we have filed for 2 of those.
Okay.
We filed for additional products as well. And, we'll be bringing out products, along the way throughout the year.
Great. So as we discussed in December, you launched your first ETF, and this is focused on AI, a super cycle, on the AI super cycle. And there are many AI-focused ETFs available to investors because AI has been such an important theme. It has dominated the markets. So you say that these ETFs, which are in the market currently, they don't provide investors with pure exposure to capture the potential impact of AI. So tell us a little bit about what shortcomings you see in the ETFs which are currently available to investors and how your fund is designed to be different.
Sure. And this was John McNeil's, brainchild, and why he decided to get into the ETF business with me, is that he was looking for an efficient way to gain exposure into the AI market and into the electrification market and some of these others, and realized that the ETFs that are in the market today generally are heavily concentrated in the mega cap brand names that everyone owns in other funds and in single stock portfolios. The Mag 7, the Netflix, the Salesforces, the Metas, the Apples, the big name companies that, most investors already own. And frankly, if you look at the AI ETFs in the market that are over concentrated to these, the Metas and the Apples and the Amazons, those are not AI companies. Now, certainly those companies are making massive investments in AI, but their investments are going into infrastructure to drive their ability to develop advanced AI models and bring value to consumers down the road. So the best way, and John, again, John had come up with the initial model on how to approach this was, let's look at the supply chain. Let's understand where the actual profits are being made along the supply chain. Let's overlay the bill of materials on what goes into building out the infrastructure in the AI space and find those companies that are heavily involved in this. So for instance, looking at the data center market. So if you look at the AI market, where's the investment going? It's going into data centers and semiconductors. And when I say data centers and semiconductors, I'm specifically talking about AI data centers and semiconductors, which is a different business than just traditional semiconductors and data center businesses. So, if you look at a data center, for instance, what goes into building an AI data center? You've got cooling, you've got racking, you've got fiber optic cable, you've got servers, you've got all these different components that go into building out the data center. So it seemed pretty logical that if you want to access the robust profit pools and where all this investment is going, you need to look at the bill of materials and find the companies that are actually winning the business in each one of those segments of the supply chain. For instance, the cooling companies, the Vertivs of the world, Vertiv Holdings, one of our top holdings, they're a large player in the cooling systems for AI data centers. So it's a really interesting way of approaching the space. And, we think it's extremely different than anything else currently in the market. And if you look at our holdings versus any other holdings in any other products, you'll see a stark contrast.
Very interesting. Let's talk a little bit about the investment process as well. So how do you implement this strategy that you mentioned?
Sure. So we're an active ETF, but we're active to a rules-based process. So our rules-based process is all about analyzing the bill of materials, and it's fully transparent. And we think that's important because, we think investors should know why a specific company is in our portfolio. And we believe that being an active ETF is crucial because in a dynamic industry such as AI, things are moving very quickly. You need to be nimble to move in and out of positions as necessary. So, from a high level, the core of our portfolio is built as such. First, we analyze the supply chain. We identify all the different segments of the supply chain within data centers and semiconductors that are relevant to the AI business. Then we overlay the bill of materials, meaning, so once we determine which, all the levels of the supply chain, we'll determine how many dollars go into each one of those segments. So for instance, just picking on cooling and power and cooling systems again, that's around 30% of the cost of an AI data center. So, we go down the supply chain, we apply the different levels of cost to each one of those. Then what we do is we map the companies to each one of those segments. So we try to find, all the companies that are in that power and cooling segment of the supply chain. Then what we do is we dig into the financials and we try to determine, how much of this company's revenue is actually coming from AI, because they may be in the cooling business for data centers, but that doesn't mean they're in the cooling business for AI data centers and getting that AI business. So we're trying to find companies that are actually getting a significant portion of their revenue from AI projects. Once we determine all that, we come together, we roll up the portfolio, which ends up being around 80 to 85 companies. And that forms the core of the portfolio. And then that's rebalanced twice a year. Every June and every December, we rebalance the portfolio. We go through this whole analysis again and all the research to make sure that things haven't changed. Then throughout the year, we have our investment committee overseeing the portfolio to identify risks and opportunities. So we've taken a different approach on the investment committee as well. So we have what we call our practitioners and then our portfolio construction people. The practitioners are John McNeil, who's been in the AI and autonomous vehicle business for, since the beginning. And then we have a gentleman named Sunny Madra, who's the president of a company called Grok, which is one of the leading AI companies in the world. These guys know the business inside and out. They understand the companies throughout the world that are involved with building the data centers and semiconductors. They know, which ones are, winning projects, which ones are losing projects. So we believe that gives us a competitive advantage to determine if there are companies that need to be removed or added to the portfolio, hopefully before other people might recognize that. Once an opportunity or a risk is identified, then it kicks over to the portfolio construction people, which is myself and Professor Robert Whitelaw. Professor Whitelaw was most recently the dean of the undergraduate college at NYU Stern School of Business, and he was the chairman of the finance department for the entire school, grad school and undergrad. So he's one of the leading portfolio construction experts in the world. And our job is then to try to determine what's the best way to affect the change that the practitioners have identified. Looking at the risk reward and looking at all the risk metrics, try to determine, what comes in, what comes out, and how do we weight it to, optimize the portfolio.
It's an interesting approach. And as you mentioned, that most popular AI ETFs have a lot of exposure to the Max 7, particularly NVIDIA. And I'm looking at the top holdings in your ETF, and they look quite different. On the top, I see SY Hynix, which is a South Korean company. Then I see Micron, Taiwan Semiconductors, Intel, Vertiv Holdings that you mentioned. I also see NVIDIA, but this is the 10th largest holding, so very different from other ETFs, and a lot of international exposure too. So would you like to add any color to these top holdings or the sector exposure or geographical exposure?
Sure. I would like to address NVIDIA because that's an interesting one. People say, well, you still have NVIDIA in the portfolio. We do. And it's interesting that it's now in our top 10. It's number 10, I think. It was, I think, number 18 just a few weeks ago, but it's had a run. So we have NVIDIA in the portfolio, not because they're dominant and they're a dominant player in pushing out these high performance AI chips. We have them in the portfolio because they are a major player in one segment of the supply chain in the AI data center supply chain. So in the servers and IT the servers and IT services portion, they are the dominant player. So that's why they're in the portfolio. So it's a little bit of a nuance, which I like to bring up. They're obviously a critically important player, and thrilled that they're in the top 10. But they're, unlike some other products in there, we don't load them in there at a 7% allocation because of, who they are. Intel is an interesting one. Intel was, I think, around our 20th largest holding, but there was some news recently about them being potentially broken up by Taiwan Semiconductor and Broadcom. So their stock has had a run, and now they've popped into our I think our number 5 position. So we're trying to get really exposure to the picks and shovels around the world, the important companies that are driving the growth, and the important companies that are actually getting all of these hundreds of billions of dollars of investment dollars that are being announced constantly. I mean, the EU just came out with some news that, they reiterated their $200 billion of investment in infrastructure. There's some news coming out of Saudi Arabia with another $18 billion was recently announced to build the world's largest inference center down there. There's a lot of excitement and a lot of money being thrown around into this industry. And it's important because of the national security ramifications of being a leader. Everybody wants to have, a leadership position. So it's going to be an AI arms race, for lack of a better term.
So on your website, I saw an interesting white paper about data centers. And you mentioned, you talked a little bit about AI data centers and how they are the picks and shovels of the AI revolution. So this white paper is Data Centers, the Unsung Heroes of AI Innovation. And it had some interesting stats and details. Could you share some insights from that paper?
Yeah, sure. I mean, it's so we're spending a lot of time on educational content. We think it's important to educate investors about this space because it is complicated. I think the key takeaway from this is that, without drastically increased levels of compute coming out of these data centers, it's going to be difficult for the industry to mature. And so this is where the investment dollars are largely being spent. Hundreds of billions of dollars have been announced, with a lot more coming. Now, the existing capacity in the industry is pretty much taken. So there's a land grab right now to build new data centers, and there's a lot of gating factors, right? It's the how much equipment can you get and build, how much can you source to build the data centers, which goes back to the supply chain process that we follow, which is all of these companies that were picks and shovels are putting tremendous amounts of dollars into their own supply chains to make sure they can satiate the demand for their clients. But the other piece is certainly the energy piece. Energy is going to be a challenge, and I think that's what the industry is grappling with now.
Great. we'll have to leave it there. Congratulations on the successful launch and also good luck with the upcoming products. And thank you so much for joining us today.
Thank you for having me.
That was Patti of VistaShares. And the ETF is VistaShares Artificial Intelligence Supercycle ETF. The ticker symbol is AIS. And as we mentioned, there are many other AI ETFs available to investors, and they are worth a look. So the most popular in this space is by GlobalX. GlobalX Artificial Intelligence and Technology ETF. The ticker symbol is AIQ. And the one by iShares is ARTY. It is the iShares Future AI and Tech ETF. And this, in fact, is the cheapest ETF in this space with an expense ratio of 47 basis points. And Roundhill offers an ETF which is focused on generative AI and interesting ticker symbol CHAT, CHAT, Roundhill Generative AI and Technology ETF. And there's one by Robo Global, which is worth a look. Robo Global Artificial Intelligence ETF, ticker symbol is Think, THNQ. Thanks for listening. If you like our show, please leave us a rating on iTunes or wherever you get your podcasts. Make sure to subscribe so that you do not miss any episode. If you have any comments, questions, or suggestions, please email podcast@zacks.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.